Corporate finance practice problem using Excel. Size of lease payment calculation. Get ready, it's time to take your chance with corporate finance. Here we are in our Excel worksheet. If you have access to the Excel worksheet, would like to follow along, note that we're in the practice tab as opposed to the example tab. The example tab in essence being an answer key, information on the left-hand side, populating that into the blue area on the right-hand side. We have a situation where we want to calculate what the lease amount should be. So for example, we have our asset of $150,000, the lease year 25, and the desired return is going to be 13%. So given that information, how much should we calculate our lease to be? We're going to start off thinking about that in terms of a yearly lease payment. What would be the yearly lease payment? And we'll have our standard kind of calculation for present value type of analysis. But notice we're looking for the payment. Now there is a payment function here, but you might be more used to looking at the present value and future value type of calculations. So let's use the present value calculation to then kind of back in with the use of the goal seek to think about what the payment should be. So let's use goal seek here. We're going to say goal seek, and this is going to be the lease payment. And I'm just going to start off with a lease payment of $10,000 for the starting point, and then we'll change that cell to get the payment to what we need it to be. And then we're going to take a look at the present value formula to back into what the payment amount should be. So if I use the present value formula, we know what the end result's going to be. We want it to be that $150,000. We know what the rate is. The rate's going to be the 13%, and the years are going to be 25. And then we're going to be adjusting then the payment to get to the payment that we need to be for the end result to be at the $150,000. So we're kind of using that present value formula, but solving for an unknown as we might do in an algebraic equation. But instead of reworking the algebra to back into the unknown using algebra, we're just going to use goal seek, which will use the brute force kind of method for Excel just to kind of figure out that by trial and error what the unknown should be by changing this number. So let's see what it looks like. Negative present value, shift 9. We've got the rate. The rate is going to be the 13%, comma, and then we'll pick up the number of periods, which is 25, because we're talking years here in this case, comma, and then the payment amount is that $10,000, which is the one that we're going to be changing, and enter. That gives us the $73,300. We need it to be the $150,000. So we could then use trial and error now by upping this amount to say $15,000, for example, and we could see the increase down here. We can use Excel to do that for us by going to the data tab up top, forecast section, what if analysis goal seek. The goal that we seek is we want to be setting this cell and changing that cell to be 150,000 by then changing this cell, the 15,000 in it. So we're asking Excel, would you please make this 109,950 to be 150,000 by changing this 15,000 cell up top? We're going to say, okay, does it for us. There we have it. So we're at the 20,464 about for the lease payments. Now, you can do that same kind of calculation with the payment formula. So we could say, instead of doing it that way, let's use the payment formula. Even if you use the payment formula, however, I would still kind of double check it by using a present value type of calculation. So for example, if we use the payment formula, we could say this is going to be equal to the payment PMT formula, and we want to pick up the rate, which is going to be the 13%, comma, number of periods is going to be 25, and then comma, and the present value is the 150,000. So there we have that, and enter. That gives us once again the 20,464. If we want it to be positive, I would take that, make a negative in front of here, and then we have the positive number. Then you could double check that if you so choose by then doing the present value calculation as we did up top with that as the unknown, just to kind of double check that you have the proper calculation. Now you might do this, you might do the payment formula, and what if we broke this down to a monthly formula, monthly instead of yearly. So if I was to say monthly payments, then you might say, well, I can take then this 20,464 divided by 12, and that would be an approximation of your monthly payments. So you might put that up here, So monthly might then be this divided by 12. You have your monthly payments, and so let's make that, make it blue and make it bracketed, and then do our formatting here. I'm going to make this one black and white to make it stand out as a header. So like that, or you could do the formula like this. You could say, well, now I'm going to take the payment, PMT, shift 9. The rate is going to be the 13%, but now it's going to be per month because I want to break this down not on a yearly basis, but monthly basis, so I can divide that by 12, and then comma, number of periods would be 25, but that's in years, and we're talking monthly periods now, so we could take that times 12, 25 times 12, comma, and then the payment is going to, and then the present value is going to be that 150,000. And then if we say enter, that's going to give us the 1,692. Let's add a couple decimals on that one. And then I can kind of double check that with the present value of the lease payment. Let's use our present value formula. Let's just call it formula to double check that. If I was to then present value this series of payments, will I then get to the end result of the 150,000 if I discount it at the 13%? So let's try that. This equals the present value, shift 9. We're going to be picking up the rate. The rate is going to be that 13%, but once again, that's a yearly rate. We want to make it monthly, so I'll divide it by 12. Number of periods, the number of periods is going to be 25, but that's for years, and we want months, so I'm going to multiply that times 12 to get the monthly periods, and then comma, the payment is going to be that 1,691.75, and enter. So there we got the 150, which is what we would expect. Let's make that a negative in front of the P to flip the sign of it. So there we have it. And so you could see, if I look at total dollar amounts here and try to figure out, the difference between this and this one we got up top, in terms of total dollars, we got the 1,691.75 times 25 years times 12 payments. So we'd be picking up the 507,526 versus this calculation, whereas if this was our monthly payment, we'd have the 1,705 times the 25 years times 12. You got the 155, so you come up, to a different calculation slightly due to the fact that this one we calculated on a present value on a yearly basis versus the monthly basis, slightly different number on those two calculations, this one being more of an approximation than down here. So if I then, let's make this blue and make that blue, and then we'll put some brackets around it. We'll make this one blue and put some brackets around that as well. Make this blue, put some brackets around it.